Nvidia is possibly the most talked about stock in the world right now. Don't be embarrassed if you've only just heard of Nvidia, or if you still don't have a Scooby-Doo what they do. They've literally come from nowhere-ish. They listed on the stock exchange way back in 1999, but it feels like they've come from nowhere. I think that the fact that unlike Amazon or Apple or Facebook, most of us just don't see the brand on a day-to-day basis, which adds to this mystique. It's an odd name which has come about from combining the words video and Nvidia, which is Latin for envy. It is also linked to the Roman goddess Nvidia, who was connected to all things evil, which were caused by envy. Based in Santa Clara, California, basically Nvidia make graphics processing units, application programming interfaces, plus some stuff with AI, and they're very good at what they do. A handy timeline on the Nvidia site makes interesting reading, from a vision to bring 3D graphics to the gaming and multimedia markets, to a foundational role in the building of the metaverse. Formed in 1993, it only survived because a Sega executive agreed to keep Nvidia alive with a $5 million investment. Again, in August 1997, Nvidia was down to 1 month of payroll. This resulted in the unofficial company motto, "Our company is 30 days from going out of business." It's probably the most talked about stock at the moment and has rocketed to the third spot on the world's largest companies list, with a market cap of about $3 trillion. The revenues and the profits have soared across the years. Annually, it's now turning over around $80 billion with EBITDA of around $50 billion. Quarterly revenue growth year on year is over 250%, and quarterly earnings growth is over 600%. The next earnings release is scheduled for August the 28th, which will be really interesting to see if the Nvidia growth story can be maintained. Let's now dive into the stats and have a look how they stack up against similar companies. From the balance sheet, we see that Nvidia has more cash but less debt than Intel and Qualcomm, and as we expect, a lower debt-equity ratio. The current ratio, which compares current assets to current liabilities and was preferred to be higher, is the highest with Nvidia. When it comes to profits and returns, we're looking for nice high figures, and well, Nvidia certainly delivers in that respect. Nvidia's profit margin, operating margin, return on assets and return on equity are largely far superior to its competitors, which can go some way to explaining the growth of the company. Next up, let's look at some price ratios. If we were to look at this table from a value investing perspective, then we want all these figures to be as low as possible. It's pretty clear that from this point of view, Nvidia's PE ratio, PB ratio and PS ratio are generally on the higher side overall. The PEG ratio is a stock's price to earnings, or PE ratio, divided by the growth rate of its earnings. And again, from a value perspective, a lower number here is better. As with the price to free cash flow ratio, once again, Nvidia is generally higher than the three other similar companies. I tend to take analyst ratings with a pinch of salt. They often tend to be overly positive, but it's worth a little look. As I suspected, the overall sentiment is very positive, with some future 12 months predictions of $200 seeming to be pretty ambitious. When considering value, it's always nice to delve into the complicated world of discounted cash flows. This time, as an example, here's the calculation from Simply Wall Street. Using their metrics, we can see that they clearly believe that Nvidia stock is overvalued. Here's an interesting stat, showing that the number of insiders buying has significantly decreased. In fact, there's been very little insider buying for the last few years. Not only has the buying decreased, but the selling has increased. Maybe they know something we don't, or maybe they just want to spend their millions on wild parties. To predict the long-term future of Nvidia is like trying to predict the future of technology as a whole. The requirement for AI solutions and data center capabilities will drive the growth. Nvidia have plans to expand into emerging markets. They will be heavily involved in autonomous driving, the Internet of Things, blockchain and cryptocurrencies, and much more. This is also new to the human race. How can we predict the extent to the success of the industries in 2 years' time, let alone 20 or 50 years' time? I mean, we could just watch Star Trek, which predicted virtual reality, Google Glass, video conferencing, and a lot more. Nvidia is at the forefront of technology, but even if we are sure that the future for AI or crypto is a positive one, we then have to ask, can Nvidia stay at the forefront, or will competition get the upper hand? One thing we do know is that staying ahead of the competition is going to be expensive. They're going to have to keep spending huge amounts of money on developing their products, services, and what many people consider to be their main moat, the software, CUDA. Thanks for watching. Hopefully you've enjoyed this brief Nvidia stock review, and please don't forget to like, comment and subscribe.